Hey everyone, and welcome to another dividend investing video. I want to cover some stocks that I'm going to be purchasing in the month of July in today's video. I am right here on the beautiful island of Maui, Hawaii. I'm on Kaanapali Beach, and as you can see right behind me, it's a busy day at the beach and it has a beautiful blue ocean. And so this upcoming month of July, I really want to refocus on the core of my dividend stock portfolio, because now what's happening is I can buy some of the core stocks in my portfolio like Johnson & Johnson, Clorox Company, and also Kimberly-Clark. These are dividend stocks that I love that make up the core of my strategy. I can now buy these at reasonable prices. And so my strategy for July is going to be really focused around these core stocks. And that's one of the things I learned actually from this very vacation, is just getting back to basics, taking things a little bit more simplistically, focusing on the good things in life, just like going to the beach or going for a stroll along the ocean. And so just as things are simple here, I want to focus just on the simple things in my dividend stock portfolio. I want to ignore some of the distractions, and I want to go for those core stocks that I love so much. And so in the video today, I want to review those 3 stocks that I'll be purchasing in July. I also want to go through in segment 2 some lessons that I learned from Maui, Hawaii about dividend stock investing. And so get ready everyone for a really exciting video. Welcome to ppcian. This is dividend stock investing for everyone. All right, everyone, let's start out today with Clorox. Check it out on the screen right now. What you see is a really heavy kind of headline that, hey, Clorox stock, it's at risk as the COVID cleaning habits return to pre-pandemic levels. And basically, if you look at the stock chart, I'm going to show that to you in a minute, you really see the same thing. This stock shot through the roof. It did really well, and now it is correcting back down to the trend line. It's reverting to the mean, if you will. But the long-term trend line, it's up and to the right. It just got ahead of itself a little bit. And in situations like this, when I see a dividend stock that I own, that I love, correcting, I like to look at the fundamentals to learn more. And so I'm going to do that with Clorox today. And so check it out on the screen right now. What I want to do first is I'm pulling some numbers from their 2018 annual report, which is available on their website. I wanted to go back a few years because Clorox shows 3 years at a time on these fancy charts. But you can see just up and to the right with the metrics, net sales, you've got 5.761 billion, 5.973 billion, 6.124 billion from fiscal or financial year 16, 17, and 18, so up and to the right. You can see earnings from continuing operations up and to the right, 648 million, 703 million, 823 million. You can see that the EBITDA margin was relatively stable. You can see economic profit up and to the right. You can even see diluted earnings per share up and to the right, 492, 535, 626. Cash provided by continuing operations, 768, 871 million, 974 million, so on and so forth. Free cash flow as well up and to the right. And so again, I wanted to go back a few years to just get a baseline. What was happening with this company before the pandemic, before this time where the products really surged in popularity because people wanted to sanitize their surfaces and keep their homes and their businesses, their autos, everything really clean. Anyway, check it out on the screen right now. I want to show you really quickly, what does Clorox look like when we look at more recent data? And so what I'm showing next is that same performance slide, but this is from their 2020 annual report. It looks a little different, but more or less they report things the same way. And you can see there, I did this in a way where you can match up the 2018. So on the last slide, for example, the net sales were 6.124 billion for 18, and you can see here at the top on the bottom for 18, 6.124 billion. And so it matches up. But you can see in 19, it was 6.241, so it ticked up a little bit. And then in 20, it's up again at 6.721. And obviously 20 was a really strong year for this company. But you can see all the way back, as I showed on the last one, from 16 through 20, sales are up every year, and a lot of that was before the pandemic. Yes, it surged during the pandemic, but these numbers have been good all along. And so if they correct back a little bit to quote unquote pre-pandemic levels, this is a core company that is still growing and it's still doing just fine. So check it out on the screen right now. Let's look at some of these other metrics. Earnings before income taxes up and to the right. It does look like in 2019, it had just a slight dip from 1.054 to 1.024, but in 20 it surged to 1.185. You can see here in the earnings, 18 and 19 were pretty flat, but 20 surged. You can see that the EBITDA margin's been pretty stable, but jumped a little bit in 20. Economic profit up and to the right, diluted earnings per share up and to the right. And I like the fact that with the diluted earnings per share, even in 19, it grew over 18. You can see in some of these numbers, 18 and 19, it wasn't as much growth in some of the prior years, but still, 19 is up for the diluted earnings per share. And the other thing that I really like is the net cash provided by operations. 19 is better than 18. And you can see in terms of free cash flow, it's not much, but still 19 is better than 18. And obviously, 2020 was just a monster year with free cash flow up 64%. But again, that's an anomaly. And so the fact of the matter, yes, you can argue that 2018 and 19, there wasn't quite as much growth as when we were looking at like 16, 17, and 18. But there was overall growth where it counted, especially like in the free cash flow, for example. And so yes, 2020 was a huge surge and numbers will come back to reality a bit. But this is a fabulous long-term dividend stock that, pandemic or not, provides products that people need, that businesses need. Let's keep going. Check it out on the screen right now. The next thing that I want to show really quickly is just the sales by segment. A lot of people think, oh, this company is just about cleaning products, but keep in mind that, yeah, 30% of the business is from cleaning, 7% is from professional products, which are also mostly cleaning products. So you have basically 37% of the business tied to cleaning and sanitization, especially with products like Clorox and Formula 409, Liquid Plumber, so on and so forth. And so that being said, that leaves a whole bunch of the business outside of cleaning. And so you have vitamins, minerals, and supplements at 4%. You have Glad bags, 12%. You have Kingsford charcoal, 8%. You have Fresh Step cat litter at 7%, so on and so forth. You have food products, Brita, personal care with Burt's Bees, which is a great brand. Now, obviously, they have international as well, and international is 15% of the business. And so honestly, cleaning is a little bit more than 37% because of that 15% international, a chunk of that, a big chunk of that is probably cleaning. But what you can see here is, maybe of this overall business, say 40 to 45% range. We don't really have the breakdown international, so we just don't know if international skews cleaning the same as the US or does not. But basically, less than half of this business is devoted to cleaning. And so that's something to keep in mind as well, as a lot of people think, oh, the pandemic is over, the whole business is going to suffer. But no, it will suffer in the cleaning products segment. But that being said, a lot of their businesses outside of cleaning, and quite frankly, even before the pandemic, the trend was up and to the right for all of those years leading up to it. They are producing products that consumers need. So without further ado, check it out on the screen right now. What I want to do next is I want to go through just a quick financial summary. And so what you can see is it's trading at $176.65. And with the EPS forward of 761 and 767, we get a PE in the 23 range. range. Now, this is not a very fabulous or exciting PE, so I don't highlight it, but as far as Clorox goes, which is a company that is rarely on sale, I would say this is a reasonably okay PE. It's a fair value, if you will, but this is the kind of company that's rarely on fair value, so I will be buying some more in the month of July. I like the fact that they just increased the dividend by 4.5% from $1.11 to $1.16 per quarter, so that was nice to see a increase in the dividend, and with a payout ratio of 61%, they're managing the dividend well. They're not overpaying. They're not paying out too much dividends. They're leaving some room for acquisitions, which I think this is a company that could make more acquisitions over time. They've made some good ones in the past, and so starting yield at 2.6% is not huge, but the long-term compound annual growth rate over the last 5 years has been 7.7% on average per year, which is staggering. And so there's room to increase that dividend and continue to grow the dividend over time. And with a market cap of $21.7 billion or $21.97 billion, and with only 15% of their business international, there's a lot of room to grow this company over time. Now, what I show on the bottom here are two charts. One is the one-year chart, one is the all-time chart. And you can see over the last year, it's been trending down quite a bit. And so a lot of investors who are really short-sighted, they look at that and they say, hey, dividend investing, it does not work. Clorox is a bad company. But when you look at the chart on the right, you can clearly see it just got ahead of itself a bit during the pandemic. It's now reverting to the mean, but the mean is still strong in terms of both dividend growth and capital appreciation, total returns, if you will. Although for me, honestly, I don't care if the stock price goes up over time, other than to reflect that, hey, Ian, you did your analysis correctly and you bought some value in the company's doing well. But for me, I buy and hold forever. So capital appreciation, it's nice, but it's somewhat irrelevant for my situation because I'm just buying for the dividends. But overall, you can see right there what's happening with Clorox. And so now that we've gone through Clorox, I'm not going to spend quite as much time on the next two stocks, but I want to show you two more stocks that I personally plan on buying as I refocus on the core in July. So check it out on the screen right now. And so the next stock that I wanted to show you all is Kimberly-Clark. So Kimberly-Clark has a story very similar to Clorox. This is the company that makes the toilet paper. We all know what happened with toilet paper during the pandemic. Now, obviously, Kimberly-Clark makes a lot of other products other than toilet paper, such as Kleenex, such as feminine products, all different types of paper-related products. Anyway, they're trading at they're trading at 133.07 per share, with the EPS estimated in that $7 range, $7.93 in 2022. The forward PE for this year is an 18, next year 16.78. I highlight the 2022 forward. That's a pretty good PE. And I would say it's a reasonable PE in an overall market where stocks are bid up quite a bit because investors are worried about inflation. Investors are hedging their bets right now in high quality equities like these types of stocks that I'm sharing today for fear that money in fiat currency will get eroded away. And so with a dividend of $1.14 per quarter, they're yielding annually 456 or 3.4% starting yield. The recent increase was pretty big for Kimberly-Clark. It was 6.5%, which is larger than their 5-year compound annual growth rate of their dividend of 4.4. So it's moving in the right direction. And the payout ratio is 62, similar to Clorox. They're managing that well. I like companies that are not paying out too much unless they have to, unless they're in an industry where it just makes sense to do that. Market cap, $44 billion. I like this company because it's on the smaller side like Clorox, room to grow. Anyway, you can see the same statement, the same kind of story with the stock charts here as you could with Clorox is 1 year, hey Ian, dividend investing doesn't work. You're making a mistake investing in these dividend stocks. You're losing money, aren't you? But now look at the long run. Over the long run, up and to the right, and it's just reverting back to the trend line a little bit. Now, I would say this one didn't get quite as much ahead of itself as Clorox, and so there's not as much reverting to the mean that has to happen as with Clorox, but still a reasonable buying opportunity. And again, what I really see right now is a PE forward of 16 in a market where the PE on the S&P is just out of this world, and 40% of the dollars in circulation were printed in like the last year or so. I look at something like this as world-class for a reasonable price. Now, is it deep discount? No, but it is a sleep well at night stock. Is it a stock that will be around? Is it a stock that I can rely on for stable cash flow when I'm in my early financial freedom? Absolutely. That's why I love names like this. These are the sleep well at night names. And I guess now that I'm in Hawaii right now, I'm just in the room right now filming this video. This is a place where I have slept pretty well at night, and I've just gone back to basics, taking things a little bit easier. And so I just start thinking, Ian, you have 51 stocks. They all play a role in the portfolio, but it sure is nice at times just to focus on the basics, the sleep well at night, because sleeping well at night, at the end of the day, it's about quality of life. And I buy these dividend stocks for my quality of life. Let's go to the last one. Check it out on the screen right now. This is perhaps just the most amazing stock of all time. This is my #1 favorite dividend stock. This is Johnson & Johnson. And so with J&J, you know what? The 1-year chart and the 5-year chart, or the all-time chart, on the right, they're both up and to the right, but it's still a value. This is a company that just continues to thrive no matter what. And so it's trading at 164. Forward EPS estimates, I remember during the pandemic, these were in the $8 range. Now at 2021, it's $9.52. 2022, it's a 10.42. This one has a forward PE of 17 this year and 15 next year. And so this is the company, lately at least, J&J, it's always kind of been in this range of 15, 16, 17 forward PE. And for me, I feel a little bit like I lost sight of this because it's such a large position in my portfolio. But what I really should do is be more careful not to lose sight, because it's still a value and it's always a value. And why go spread money on stuff that may be a little bit more risky? Look, again, all 51 stocks play a role in the portfolio. I love them all. But at this point, now that I'm in Hawaii and it kind of influenced my investing for July, I just want to take things easy with the sleep well at night stocks, especially if they're on value or at least at a reasonable price. And J&J certainly is right now, in my opinion, with a starting yield of 2.6%. It's not going to pay for my retirement or my early financial freedom expenses overnight, but with a 5-year compound annual growth rate of 5.8%, it will over time. This is certainly going to be a slower grower on the dividend, at least. At only 5.8% the last 5 years. But we'll see, with a payout ratio of only 45%, they do have room in there to pick up dividend growth if they wanted to. And the last increase was 5%. This one is a $432 billion company. So this is one of the larger companies in my portfolio. This is a large company, but they're really thriving with their economies of scale, I guess. This is a company that has historically grown through acquisition, but it seems like they really have a secret sauce in terms of integrating and managing the acquisitions. I look at it as a mutual fund of sorts of healthcare companies all in one. They have consumer products, they have medical devices, they have pharmaceuticals, they do it all, and they are a leader in the healthcare space. And I think it's one of the best, if it's my favorite dividend stock of all time, and I think it is one of the best stocks of out there that anyone could look at any time. And so for me, going into July, these are the 3 on my list. These are the 3 dividend stocks I want to buy. Will I buy other stocks outside of these 3? Probably. I'll probably look at other stocks as well. I took a break while on vacation here from buying too many dividend stocks. I just want to take it easy, spend time enjoying the island here. And now as I go home tomorrow, I want to get back into the groove in terms of my dividend investing. And so I am all queued up for July, but I'm going to bring some of that aloha spirit home, take it easy, focus on the core. So share in the comments section below which stocks you're buying in July. Let me know what you think of these 3. Are they fair values, overvalued, good values? I think personally Clorox is a fair value, but I think Kimberly and J&J, they're a little undervalued. Not deep discount, but they're good ones. They're good values for what they are, given just globally where we're at right now with everything that's going on in our world and in our monetary system. All right, everyone, so I'm going to check out now from this segment of the video, and I'll catch you, hang on there for segment 2, where I'm going to share my lessons learned from my vacation here in Maui. All right, everyone, I really hope you enjoyed that overview of Clorox, Johnson & Johnson, and Kimberly-Clark. Now in the second part of my video today, I want to go through a few lessons that I learned from my vacation here in Maui, Hawaii. The first one is just overall human psychology. I see it here in Maui, Hawaii. You can see it on the beach right behind me. It's very busy now, very, very busy right now, because everyone now is going on vacation now that the pandemic is over. I also noticed that at restaurants here, they are very busy. Everyone everyone was going to the restaurants. You'd have to wait an hour, 2 hours to get a meal because it's so busy. But just a few months ago, say 6 months ago during the pandemic, everything was closed down. No one was going anywhere because of the pandemic. And so I guess the pandemic is a really kind of outlier example, but we see this all the time in life. I've seen it in business, for example. Sometimes a business, for example, will go all out on hiring, but then when the economy turns, there will be layoffs and no one will be hired. And I see the same thing in the stock market. Sometimes the stock market is just shooting to the moon, kind of like it is right now, but other times it's doing horribly. Just over a year ago, during the pandemic, I was buying Starbucks when everyone else was selling. Everyone else was headed for the hills because it was a time of famine, but I was going out and buying Starbucks. But now that it's a time of feast, Starbucks is already almost actually doubled from where I bought it during the pandemic. And so there's this whole concept of feast or famine, and you kind of see it in travel, you see it just with human psychology, and I see it in the stock market. And so I think this trip, it's just a good reminder to me that in the stock market, yes, I'm buying some stocks right now like Clorox, Kimberly-Clark, Johnson & Johnson. And yes, there are some values out there. I've talked about them on my channel. I'll link to some of these videos in the description below, like Viatris, and there are some others like PPL Corporation. I have a few right now that are good, solid values, and I'll link to those videos in the description below. But overall right now, the market, it's a time of feast. It's a time of going through the moon. And basically what I found as an investor, it's always good to go against the trend. And honestly, as a traveler, sometimes it's good to go against the trend too, because it is busier this time. It is a little bit more stressful this time. There's just more people here. And so that's something to be aware of as a traveler. But one lesson that I've always learned as an investor that served me well is being a contrarian, going against the trend. When it's a time of feast, that's the time to be careful and to save money. When it's a time of famine, for example, have that money on the sidelines and go all out and buy those stocks when they are on sale. And so that was one lesson from the vacation. Another lesson from the vacation that I wanted to share with all of you today is just this concept of inflation. When we were here, thankfully, this is a vacation that we booked well in advance. It's actually one that we had to rebook a few times because the hotels were all closed here, unfortunately, during the pandemic, but thankfully now everything is open. It's all back to normal, and hopefully the businesses here, a lot of them at least, can catch up now with so many people here at one time. But one thing that I noticed in terms of inflation is just the cost of lodging here, the cost of hotel rooms, it's through the roof. Thankfully, though, we locked in prices before they skyrocketed. But one thing also is just even rental cars. We have a rental car, I think it cost around $2,500 for, say, 2 weeks of time. And that's a lot more than we're used to paying. When we've come in the past for rental cars, it's been less than half of that cost. And so what we're seeing in this post-pandemic society, where all of this money has been printed, there's been all this stimulus, there's been, basically, I heard some statistics, like 40% of the money in circulation right now is printed in the last year. And so it's crazy. And so you're starting to see inflation. You're starting to see inflationary pressures. And the question that I get a lot on my YouTube channel about dividend stocks is we're starting to see margins squeezed. A company that I reviewed recently, Campbell Soup, they had a bad quarter because they haven't raised the price of their products yet, their soups and their other products, their goldfish, their snack foods, but the cost of inputs, the cost of producing those products has gone up, and so margins were squeezed. They had a bad quarter, the stock tanked. I like it, it's a good buying opportunity. That's another stock I like right now. But what will happen probably likely around the corner is they're gonna have to raise prices and pass along the inflation to the consumers, and everything will work out in the long run for investors, in my humble opinion. But that is something I've already noticed on rental cars. Already rental cars are a lot more expensive here. There's inflation because during the pandemic they let go a lot of their fleet. Now they're having to buy back the fleet, and as they buy back the fleet of cars, they're raising the prices to compensate for that. And so that's just something to keep in mind. A lot of people ask me, Ian, I'm concerned about this inflation, that it'll hurt dividend stocks. But for me, I look at dividend stocks as being a great hedge against inflation. I don't want to hold the fiat currency because that's what gets devalued during inflation, but holding world-class businesses, they can eventually push the prices along to the consumers, just like the car rentals are doing here on Hawaii. And now with something like Campbell Soup, maybe they haven't done that yet. It hasn't happened just yet. They had a bad quarter. That creates a temporary buying opportunity, in my opinion, for savvy investors like myself. But in the long run, what's going to happen is they're going to be able to pass along those increases. And so I look at solid world-class dividend stocks as great hedges against inflation. And so that was the second lesson that I learned from the vacation. Something else, I got my handy notebook here. Please go ahead and smash the like button. If you have not done so already, it means the world to me. And please smash the like button if you've been here since the days I used to do the videos in my backyard and had the notebook. It means the world to me if you've been around all that time. Thank you so much. And also don't forget to subscribe if you have not already. I have so many more videos on the way. I'm so excited. I actually filmed several videos on the vacation this time. I actually had one I already posted on my Patreon. Check out in the pinned comment below. I'll link to my Patreon if you're not there already. You got to check it out. I think I have like 37 bonus videos over there already. Just for $3 a month, you can cancel at any time. It's really worth checking out. Everyone over there is having a great time on Patreon with all the bonus content. But I filmed a Patreon video. I filmed one already for my crypto channel. This is my second one here on my dividend channel. So I am enjoying the vacation and doing as many videos as I can while I'm here to stay connected with the community. And so anyway, I'm going through the notebook and I'm just going to see what else did I learn from this vacation. I would say one thing, honestly, this is the first time as a family, and honestly the first time that we've taken any vacation this long in a really long time. We're here for 2 weeks. And so it's been really good, really exciting. But what I would say when you're here more than 2 weeks, that's a little bit different from when we would come in the past for 1 week. And also I would say also maybe just coming off of the pandemic and off of a year where I've been working so hard and kind of, just grinding away, working, probably the hardest I have in my entire life, is there have been good days and bad days. And so one of the things in the past, I come to Hawaii and every day is like a great day and it's all smiles, all happy. But I would say some of the days here, like today is just a fabulous day. We're having a great time. We went to the pool in the morning. But other days there have been some stresses at certain times. And I think that's just how life is. Sometimes there's ups and downs, even if you're here in paradise. And so the reason I'm bringing this up, and I think it relates to dividend stock investing, is a lot of people, they kind of look as financial freedom as their savior. They kind of look, hey, when I reach financial freedom, when I finally get there, all of my dividend income, it covers all of my living expenses. Finally, I will have made it. Finally, everything will be good. It will be good every second of every day. Nothing will ever go wrong. And the corollary that I'm trying to bring up from my vacation is, hey, I'm here in paradise and there have been good days and there have been, okay days, and most of them have been good, but that's how life is. And so what I'm trying to say as a dividend stock investor, you don't want to like basically bet everything on financial freedom. And this is going to sound crazy coming from someone where my goal in life is the financial freedom, having all of my dividends cover all of my living expenses, but you really ought to think about life more holistically and have other passions, whether it's traveling to places like this or running. I went through a really nice run this morning. And so these are things you just got to keep in mind, because when you reach financial freedom, I haven't been there, so I don't know yet. There are members of the community. Chime in the comments below if you've reached financial freedom. What's it like? I'd love to know if you have those bad days still, or it's all good days, all positive 100% of the time. I have to imagine, though, that it isn't. And so what I would say as you prepare yourself for financial freedom, as you're going through dividend stock investing, enjoy the journey along the way. Develop, I would say, habits and hobbies and things that you just like to do in life, like I do, like running or spending time with your kids, or it could be anything. It could be doing video games, whatever you like, because that's got to be part of it as well. Not only do you want to enjoy the journey, but when you get to financial freedom, knowing that it's not going to be necessarily all easy all the time, you want to have those things in life that that keep it going and make it fun along the way. And so that's just something else I realized that was really interesting from this trip, and it was a good lesson for me. I would say, let's see, what else do I have on my list right now? I would say this is an interesting one. So I'm the kind of person that really, I think putting myself into the situation in Hawaii right now, it's a lot different than whenever we visited in the past. Whenever we gone in the past, as I had mentioned before, it's been really quiet and I really enjoyed that. This time it's really, really busy, and I think some of that is we're coming in June because the kids are out of school, and that's just when the scheduling works for something like that. But I would say it's been a little bit stressful at times when, oh my gosh, it's so crowded, or oh my gosh, at the restaurant, we're just waiting too long. And it's kind of getting to me. But one of the things I found to enjoy things more is just enjoying some of the simple pleasures. Like this morning, for example, I went for an early jog to the supermarket, and I picked up some really hot foods, Hawaiian breakfast, like the fried rice and eggs and sausage. And I would say, honestly, those foods just from the supermarket, for myself personally, I enjoy it a lot more than the restaurant experience. And I can enjoy it from the room, from the patio. We have a beautiful patio right off the side of our room. And so enjoying those more simple things, honestly, for me is the best. I enjoy it more than a really expensive meal out. And so one of the lessons for dividend investors is sometimes as dividend investors, we think, oh my gosh, we're losing out on life, or oh my gosh, we're missing so much in life because we're cheap, or we're frugal, or we're missing out on those expensive things. But what I would say, yeah, it's expensive coming to Hawaii, so you need to know when to splurge. But one of the things I learned when I was here is in Hawaii, the things I enjoy the most are the things that don't cost money. It's basically going and getting, a Starbucks coffee here on Kaanapali Beach, or going to the pool this morning with my kids, getting the breakfast this morning with my wife and kids. Those are the types of things in Kaanapali Beach which don't cost as much money that I have enjoyed so much more than the expensive restaurant. And so sometimes as a dividend stock investor, if you're cutting corners, you're saving money, you're not doing all the expensive things with your friends, don't worry, you're not necessarily missing out. I mean, certainly you need to know when to splurge. And so the amount of money it costs to come here and get the rental car and everything, this is an expensive vacation. And so certainly it's important to splurge strategically and to keep the journey interesting. I don't want to wait until I've reached financial freedom to come here. I'm going to be too much further along in life. I want to enjoy it right now. And so you have to take everything I'm saying with a grain of salt, and there's two sides to all of these lessons. But I would say sometimes people I see it in the comments, I see it in the community, they just kind of beat themselves up that they feel like, am I doing the right thing? Is it worth doing financial freedom? I'm just here to say I think it is, because I think the best things in life, they are the things that don't cost as much money, at least for my personality type. Certainly, where I just don't like going in those busy restaurants. And so I want to see what else is on my list here before I end the video today. All right, one last lesson from the trip today. I've been here almost 2 weeks now, and one of the things I noticed, and I am still tired. I haven't been drinking quite as much coffee here, and so that's affecting me, but every night I've been getting really solid sleep. I haven't been working as hard. I have been working a little bit, and I guess that's the exciting thing about my upcoming financial freedom when I do get there, is eventually I won't have to work as much at all on vacation unless I want to. And I don't consider these videos work. I love this. This is my passion. But I'm talking, while I have been here, I have had to do some work, and so that comes with the territory. But one of the things I would say is I am surprised. Usually when I'm on this vacation, even at the end of 1 week, I don't have any sleep debt anymore. But this time at the end of 2 weeks, I totally still have a sleep debt, and I'm totally still tired. So I think one of just my takeaways from this vacation, at least for myself personally, is this last year has been crazy. And so if you're in the community, you've been working really hard, you've been investing really hard, just take note of where you are at with your health, because one of the things this vacation taught about me is I don't know if my health is as good even as I thought it was, because my sleep debt is enormous. I am still really tired, but I'm working through that. And so certainly the vacation has been a good rejuvenator for me. All right, everyone, I really hope you enjoyed the video today from Kaanapali Beach. Please smash that like button. Please also go ahead and subscribe. I'll see you on Patreon. I'll see you in the comments section below. I love to hear about your thoughts about my lessons that I learned personally on this vacation, and also the stocks I mentioned today, Clorox, Kimberly-Clark, J&J, and some of the others as well. Send your thoughts in the comments section below. And before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a ton of money in the stock market, especially when it's run up this much. Also, in terms of a friendly disclaimer, or full disclosure, I own the stocks mentioned today. I am long Johnson & Johnson, ticker J&J, Kimberly-Clark, ticker KMB, Clorox, ticker CLX. I am long also PPL Corporation, ticker PPL. I am long Viatris, ticker VTRS, and Campbell Soup, ticker CPB. I own all of those stocks in my personal dividend stock portfolio. Thank you for watching the video today. I love you all. I'll see you in the next dividend investing video.